Well, hello, welcome everyone. Glad that you're with us today. I have a special guest with us. We're going to interview Nathan Bollinger. Welcome, Nathan. Good to have you with us.
Thank you for having me.
Now, Nathan, before we get into this, I just want to say this guy's a high caliber guy. He's got a degree from Western University in management and organizational studies with a focus on finance. So that's a really good degree. And when I was young, anyone that I knew that went to Western, I said, "Well, they're pretty smart people," because that's a smart person university. So kudos there. Now, now Nathan, he held multiple roles in the mortgage industry across several companies, including three different positions with Manulife Bank, which is when I was a mortgage broker, I did a lot of business at Manulife Bank, phenomenal company. So I'm happy with that. And then now, currently, he's a mortgage agent with a brokerage called Guardian Mortgages, and so this is great. I've got to know Nathan a little bit, and I really like this guy. So I want to expose him to you guys, so you can hear him, and then maybe eventually, when you have a mortgage need, you can call him directly because I'm going to put his contact information in the body, like in the description, in the comments, and so on, because I think he's a good guy. So. Uh, Nathan, tell us here. So before we talk about strategy, because we're going to talk about mortgage renewal in 2026, but before we do that, can you just give us a quick snapshot of the mortgage market as it stands now, and maybe in the past, leading up to now, but then also as we look to 2026? Can you help us get a good understanding of that, please?
I could certainly try. So I think right now we'd be able to call the mortgage market. So the expectation is that there's going to be a relative stability moving into
Oh, that's
2026.
okay. That's good.
What I would call it. I think the best way to sort of put context to that statement is to look back at sort of the instability of the last 5 years. You
Yeah.
had the ultra low interest rate environment that you would have remembered during COVID, where the Bank of Canada overnight rate got as low as 0.25. So
Mhm.
that's as close to zero as you can get. That those low rates held on until about June of 2022, where we saw a rapid increase. And you'll remember that time when a lot of the headlines were talking about cost of living crises and
Yeah.
inflation. So the Bank of Canada was chasing the inflation numbers that were coming in. So you saw increases very quickly to a peak in July of 2023, where it was up to 5%. So for context there, if you had a variable rate mortgage, your interest rate would have increased by 4.75% in
Mhm.
that 3 or so year window.
Yeah.
Since 2023, we've seen, albeit less extreme, but steady
Mhm.
decrease in the interest rates, where it sits today at 2.25 is the overnight rate.
Yeah.
So when I say stability, I mean that there's no expectation that we're going to go back to the ultra low interest rate environment during COVID. There's
Mhm.
also no predicting that we're going to go back to a really elevated interest rate environment in 2023.
Yeah.
So four of the big five banks are predicting no change to the overall overnight rate in
Okay.
2026.
Mhm.
Both of them, and then I think one of them, and additionally national banks, so two of them we'll call it, are predicting a small increase. And the
Okay.
same goes for the bond yield as well, which is what benchmarks the fixed rate mortgages.
Mhm.
Is basically they're predicting the same rate, and if there's a change, it'll be a small increase for 2026. That helps for planning. I think people in the last 5 years, there's been concerns about, hey, what are rates going to do? At least
Yeah.
now we're hopeful that they're a bit more stable. The caveat to that always is that no one has a crystal ball. Nobody
Yeah.
saw COVID-19 coming and its effect on interest rates. Nobody saw the Bank of Canada raising rates so aggressively in 2022.
I
But
know.
for what it's worth, we're expecting rates to be quite steady for the next 12 months or so.
Well, that's good. Hey, and talking about rates, and before we get into the mortgage renewal stuff, now the Bank of Canada, the overnight lending rate, that when that goes up or down, that affects the variable rate. And I think people are confused about how the fixed rate, what makes the fixed rate go up and down. Just kind of high level. What's the difference between those two and how that works?
Exactly. So the Bank of Canada will publish the overnight rate. They'll meet a handful of times every year. A change in the overnight rate you'll see each bank adjust its prime rate the following morning. you'll see any changes to anything that's adjustable or variable. So your line of credits, your variable rate mortgages, your adjustable rate mortgages will all change in accordance with that policy change.
Yeah.
The fixed rate is a little bit more on the open market side. You can think about it as with the bond yield. So wherever the bond yield is at, there's a rough premium that they apply for the operating cost and the risk associated with issuing a mortgage for that term.
Yeah.
But very similar to what the predictions are for the overnight rate. We're looking at the 5-year bond is going to be close to that 3% range, elevated a little bit from 2025.
Okay.
But again, any change that's anticipated at this point would be a slight increase throughout the year. No major adjustment.
All right. That's good. I appreciate that because people don't understand that. And it's good to have a mortgage guy give some clarity on that. So I appreciate that. So the other day we were talking and you mentioned a term and I was like, what is that? You said renewal shock. You talk about renewals going into 2026. I'm like, that's phenomenal. Help us understand that. So could you just kind of explain to us, what does that mean? What does this renewal shock look like? Also, tell us what challenges someone might have if they need to renew a mortgage that they've been in for 5 years, whether it be a 5-year fix or variable rate, and that's coming up in 2026. Just kind of address that for us, please.
Yeah, so renewal shock speaks to really it's the change in what your payment will be when you renew your mortgage. So let's say you took that 5-year term back in 2021 now. Mm-hmm. Your contract is coming up. So your deal for that rate that you negotiated is now expired. You're going to be subjected to whatever the current interest rate environment is, whatever your existing bank offers you or whatever you might qualify somewhere else. What we know for certain is that rate is going to be higher. So 5 years ago, I was a mortgage specialist working for a bank. In 2021, I was selling a rate sheet that I was selling high ratio mortgages at 1.99%.
Yeah. Wow.
That mortgage I sold back then, or those handful of mortgages, they're up for renewal this spring. And right now, it's barring any major changes, which we're not expecting, you'd be looking at a high 3, almost 4% for that same mortgage. So even with the reduction in principal that you paid down the last 5 years, that's for a $500,000 mortgage, about a 20% increase in your monthly payment. And that's after tax dollars. So that's that shock piece. Now you have to come up with an extra X amount of dollars every single month. And that can be, like the name suggests, a little bit shocking for some people. That's all that term is referencing. And it's not an insignificant portion of the population. A lot of business happened in 2020 and 2021. So you have the Bank of Canada predicts that 60% of all mortgages are up for renewal in 25 and 26.
Wow.
I don't have the breakdown for which year had more, but I also know that in 2023, when rates are really high, people were renewing 3-year terms are very popular.
That's right.
Stuck in. So we don't have the exact number, but we know for certain that a lot of mortgages are up for maturity in 2026. And there's tangible changes to the rates that are available.
Yeah, that's crazy. So we got a high number of renewals coming up for 2026. I was doing mortgages 5 years ago, and I remember everyone was doing a 5-year rate, and it was the big thing. And then I remember, like in the, as you talked about 2023, 3 years, very, very common. So all that's renewing. So now that that's renewing, so my next question for you here is, how early? So if I have a mortgage renewing, if 60% of the people have a mortgage renewing this year, how early should someone start preparing for the renewal? And if someone has a renewal coming up, let's say in the next 6 months, what steps should that person consider taking as they approach that renewal?
Yeah, so I think my stock answer to that question is the earlier the better. The more time.
That's a good one. Yeah, I like that.
The earlier you look at it, the more options you have, the more time you have to get things sorted. But let's use the 6-month example. That's a really healthy time to start looking at it. Step one, I would say let's review your current mortgage. So let's see what your current principal balance is on the mortgage. So what do you actually owe the lender? Let's figure out a rough estimate of what you think your property is worth. So the relationship between your debt level and the property value. Let's understand what your remaining amortization schedule is, or what it looks like too. After that, I think it's a really good opportunity to clarify what your goals are for the future. So in other words, let's use the 5-year example. It's been 5 years since you signed the original mortgage. What's changed in the last 5 years? What's changed on your income? What's changed with your expenses? Is there a renovation you're considering? Is there a new purchase, whether it's a second home or an upgrade? All of those questions can affect the term or the type of mortgage that you might want to target.
Mhm.
After that, I think it's always good practice to understand your credit as well. So there's lots of great free tools that can give you a soft credit pull, so you can get an
Yeah.
idea of what your credit report looks like.
Yeah.
That's where you can identify any challenges. And 6 months out, you still have a lot of time to make changes.
Mhm. That's right.
And also from a debt level piece as well, there might be an
Mhm.
opportunity to optimize further with a consolidation in some examples.
Yeah.
So that's understanding kind of what options you have available to you, benched against what do you want the next 5 years or next 3 years to look like.
Mhm.
And you can't do that if you don't have enough time to do it. The last piece is also on the rate hold side. Not necessarily thinking this is going to be a major piece in 2026, because I just went
Yeah.
through saying that we're not expecting major rate changes,
Yeah.
but it's kind of that safety net. A lot of lenders will offer between 90 and 120 days for a rate hold that you can do. So you put the application in 4 months before the renewal date. If the rates come down, you take advantage of the current interest rates because you just do a float down. If the rates increase, you've locked in the lower rate because you were on top of it and you put the application in extra early. So just
That's
that last piece of protection.
Yeah, I would say um, when I look at banks have their function in society, right? And but when it comes to doing mortgages, they only have access to the mortgage guy they work with there. They only have their small shelf of offerings. But if you work with a mortgage broker, like Guardian Mortgages, you're a mortgage broker, so you have access to many, many, many lenders, right? Now, what I find working with people in their finances for over 17 years now is people we just don't know what we don't know, right? So someone may be a pretty sharp person, they may know a fair bit of stuff, but you specialize in mortgages, mortgage industry. You don't know what you don't know. So what would be the value of someone thinking through all these steps kind of with you in an official kind of, hey, let's do a Zoom call, let's talk. What's the value to the person who's thinking this through?
Yeah, I think we'll start with the low level. The easiest one is that we're completely free to work with and talk to. So
Yeah.
if nothing else, it's peace of mind that, hey, you're in a great spot. You can stick with what you're doing. Congratulations. If we can
Mhm.
uncover an opportunity to do something a little bit more efficiently, then that's great. That's bonus. We can go from there. I'm a big sports fan. We've talked about the Leafs a few times, Mark.
Right.
I think about something I want everyone to know about their mortgage for renewal is that it's really kind of like being a UFA, so an unrestricted free agent.
Oh
You can
yeah.
take that mortgage to any lender that will give you an offer on it. So basically, the reason I bring that up, or my pitch, so to speak, is why not
Mhm.
explore what's out there?
Yeah.
You don't have to move it if it doesn't make sense, but why not go price and see what other terms, what other features, what other interest rates are available to you?
That's
And we
good.
can do that because we have dozens and dozens of lenders that we partner with.
Yeah, that's good. Well, listen, this has been a great interview. And I just want to thank you, Nathan, and let everyone here listening know that if you want to reach out to Nathan, I'm going to put his contact information within the comments of the video and the description of the video. And if you want to connect with him, you can do that. He's a good guy. So I just want to let you know that. So listen, thanks again, Nathan, and thank you all for being with us.
Thank you for having me.
All right, you're welcome.